A journal entry is a way to record a business transaction in your accounting software. Think of it as a manual entry in your company's books. Most of your daily transactions are automatically recorded by QuickBooks Online, sales receipts, bills. However, there are times when you need to make adjustments or record unique transactions yourself. This is where journal entries become essential. They give you direct control over your financial records, allowing you to fine-tune your accounts with precision. Ensure everything is accurately represented in your books. Journal entries are very important for maintaining accurate financial statements. They are used for tasks that don't fit into standard forms. For example, you might use a journal entry to record depreciation expense for your assets, transfer money between different accounts, correct an error made in a previous entry. Without journal entries, your financial reports could be incomplete or misleading. They are a powerful tool for bookkeepers and accountants to ensure the integrity of the financial data business owners rely on. Every journal entry is based on the principle of double-entry bookkeeping. This is a fundamental concept in accounting that has been used for centuries. It means that for every transaction, there are at least two accounts affected. One account receives a debit. Another account receives a credit. This system is designed to keep your books in balance. It provides a built-in error-checking mechanism. The total debits must always equal the total credits for every entry. This ensures the accounting equation remains balanced. Assets, liabilities, equity. The balance rule is the heart of double-entry accounting. In every journal entry you create, the total amount of the debit column must exactly match the total amount of the credit column. QuickBooks Online will not allow you to save a journal entry if it is out of balance. This simple but powerful rule prevents many common accounting errors. It forces you to think about both sides of a transaction. For instance, if you increase an asset account, a debit, decrease another asset, increase a liability, increase equity. Creating a journal entry in QuickBooks Online is a straightforward process. First, open the journal entry screen. Click the plus New button in the top left corner of the QBO dashboard. A menu appears with transaction types. Under the Other column, choose Journal Entry. You land on the Journal Entry screen, your central hub for manual financial records. At the top, Date. At the top, Journal Number. Below is the main grid. Column, Account. Column, Debits. Column, Credits. Column, Description. Column, Name. Column, Class/location. The account column opens to your chart of accounts. Enter monetary values in debits. Enter monetary values in credits. Type a clear description for each line. Step 1. Set the correct date. Step 2. On the first line, select the affected account. Step 3. Enter the amount in debit or credit. Step 4. Add a clear description for that line. Step 5. On the second line, select the other account. Step 6. Enter the matching amount in the opposite column. For example, if you debited the first line, you will credit the second. Review entries and descriptions. Check totals at the bottom of the debit and credit columns. The two totals must be equal. If not, correct mistakes. Once balanced, click Save and Close or Save and New. That's how you create a clean, balanced journal entry in QBO. Imagine your business took out a small loan of $5,000 from the bank. The cash was deposited into your checking account. To record this, you need to create a journal entry. On the first line, you would select your checking account from the chart of accounts. Since cash is an asset and it increased, you would enter $5,000 in the debit column. On the second line, you would select your bank loan liability account. Since your liabilities have increased, you would enter $5,000 in the credit column. This keeps the entry balanced. Here is another common example: recording owner's investment. Suppose you, the owner, invest $2,000 of your personal money into the business. This transaction increases the company's cash and also its equity. Your journal entry would have two lines. The first line would be a debit to your checking account for $2,000, reflecting the increase in cash. The second line would be a credit to an equity account, such as owner's contribution or owner's investment, for $2,000. This correctly shows that the business now has more cash, and that this increase came from the owner. A third example is recording monthly depreciation on a piece of equipment. Let's say the depreciation expense for your company vehicle is $300 for the month. Depreciation is an expense, and expenses are increased with a debit. So, on the first line, you would select the depreciation expense account and enter $300 in the debit column. The other side of the entry goes to a contra asset account called accumulated depreciation. This account reduces the book value of your asset. You would select accumulated depreciation, vehicles, and enter $300 in the credit column, completing the balanced entry. These examples show how journal entries handle transactions that are not simple sales or purchases. Section 4. Managing your entries. Edit. Delete. Automate. Sometimes you'll make a mistake or circumstances change, requiring you to edit a journal entry. QuickBooks Online makes this easy. Run a journal report to find an existing entry. Go to Reports and search Journal. Click the specific entry you want to modify. That opens the original journal entry screen. Change the date. Change the amount. Change the account. Change the description. Click Save and Close. If an entry was created in error, you may need to delete it. Deleting permanently removes it. Use caution. Find and open the entry, same as editing. Look for the More button, choose Delete, and confirm when QuickBooks asks. For regular transactions like monthly depreciation, rent payments. Make the journal entry recurring to save time. Look for the Make Recurring link at the bottom. Click it to open the recurring template screen. Name the template. Choose Automatic or Reminder. Set the schedule, for example, monthly on a specific day. To see impact, view key reports. Journal report. Lists entries in a date range. Run a trial balance to check debits versus credits. View profit and loss. View balance sheet. Entries affect those balances. Section 5. Best practices and common pitfalls to avoid. To ensure your journal entries are accurate and useful, follow a few best practices. First, always use a clear and descriptive memo in the main description field at the top of the entry. This should explain the overall purpose of the entry. Second, add specific details in the description column for each line item. Third, always attach source documents if possible: receipts, bank statements, loan agreements. Fourth, use a consistent numbering system. Your own format can make entries easier to track. Fifth, and most importantly, if you are ever unsure about an entry, do not guess. Ask your bookkeeper or accountant. There are also several common mistakes. The most frequent mistake is reversing debits and credits. Another frequent mistake is posting an entry to the wrong account. A third mistake is using a journal entry instead of a standard QBO form. In summary, mastering journal entries in QuickBooks Online is a key skill for accurate bookkeeping. Remember to always ensure your debits equal your credits. Use the description fields to leave a clear audit trail for yourself and others. Take advantage of features like recurring entries to save time on repetitive tasks. Practice with simple transactions to build your confidence. Always ask for help from an accounting professional when you are in doubt. Ready to take control of your books? Try creating a practice journal entry in your QuickBooks Online account today. If this helped, like, subscribe, and hit the bell for more step-by-step QuickBooks tutorials. Download the free cheat sheet in the description. Thanks for watching.